have been really looking forward to this interview. We're going to be talking about the London property market and rental scene. Being a London landlord myself, having been investing in London since 2004, I'm very interested in this topic, and I'm delighted to be joined by another prolific landlord who's been investing in London for even longer than myself, and that is Imran Khan, who is also the co-founder of PropertyLoop. And Imran, I think we're having this conversation at such an interesting time, because obviously it's post-COVID-19 lockdown environment, and that has created many what I'm going to call mini trends, and I'll explain that later. And I think it's interesting because London, typically, what happens in London is always where we start to see things happening first, and then they kind of tend to spread out into the rest of the country as a ripple. So I think London's a good place for all landlords to keep their eye on. So we'll be talking about that. But before we get going, be interested to know, how long have you been investing in London? And perhaps you could give us an overview of the locations you favour and why you favour them.
Thank you so much for having me on today, Vanessa. It's an absolute pleasure being on with you in Property Tribe. So thank you for that. So I've actually been investing in London with my business partner for nearly 20 years now, actually. We started off in East London, in a place called East Ham, actually. So that's where we've begun. And we predominantly have the majority of our portfolio now actually in Canary Wharf. Mm-hmm. So we divested from the other parts of the East End and other parts of London that we were in. And predominantly the majority of our portfolio is actually in Canary Wharf. It's just a place that we understand, we feel very comfortable with, and it suits our style of investment, and we're very passive investors in one sense. We like to have good tenants who take care of the properties, and we don't have to get involved too much with. And Canary Wharf is definitely a place that allows us to do that.
I think it's a very interesting area of London. And I think, there's so many negative headlines of people exodusing the city, flooding away from London. I don't know what your views on that are, Imran, but my feeling is that it might be what I said was a mini trend, because I think it's mainly people that were probably thinking of exiting London anyway, and COVID has just kind of amplified or added velocity to what they were thinking, and it's kind of pushed them to make that decision. I personally don't believe it will be sustainable.
Absolutely, I agree with you. I think it's something that people have been spending a lot more time at home, I guess, with their families, and discussions obviously taking place about where they're living, what the place looks like, and so on and so forth. So I think some of these things were kind of built up in the system anyway. And of course, in London, the market has been quite stable, but it hasn't seen a major peak since 2014. Mm-hmm. And that was the last time we really had a huge blip, on the scales. And at the start of this year, there's huge activity anyway. So I think whether it was London or anywhere else, you would have seen lots and lots of movement. And I've seen all the, all the lovely phrases, the hurry to Surrey and all the rest of it. And, they sound great, but, I don't think that's reflective of the entire market and what's really happening. London is a very mixed bag. We've got people who are, coming from all over the world. We've obviously got lots of locals who live in and around London and who buy and move and rent. But equally, we have lots and lots of people coming, from overseas. And I think, just with the unfortunate events of COVID, the travel restrictions and people not being able to come over, I think that's the thing that's probably, just congested the system a little bit. And some of those purchases are just delayed. I don't think they're not going to happen. I think they're just delayed. And once we get used to this new normal, I think we're going to see a big surge in activity throughout London once again.
I agree with you, and I always cite that saying that nature abhors a vacuum. So whenever there is a vacuum, something will come along and fill it. We don't know how long it might take, but my beliefs about London actually haven't changed since I recorded a video about it about 3 years ago now. And in that video, I stated that London was a global city and it has one thing that no other city has, and that is Greenwich Mean Time. And that means that it's open for business when both sides of the world are trading. And that position on the world economic stage is incredible for London. That's not going to change. So that what will change is perhaps some of the nature of the activities that go on in London, the economic activities. And there's an article this week which I read with great interest, saying that London is one of only 3 truly global cities. I can't see that changing because of COVID-19.
Absolutely, I fully agree with you, and I may be biased. I'm a Londoner, born and bred. My businesses are here, my portfolios are here, but that's for a reason, because look, the economy is so strong in London, and this is where the jobs are, this is where the activity is, and I think when you're looking at property investment, and I think that was a great point that you brought up earlier about Greenwich Mean Time. I always like to say, we are the center of the financial world. It's as simple as that. Whether you've got New York on one side, Hong Kong on the other, we are capturing both sides of that trade and that transaction, and that's why it is such a powerful place to be. So I don't see any of that changing. In fact, that's only going to get stronger. And whether it be COVID, whether it be Brexit, I don't think these are just things. They're blips, that come and go, and they're headlines. One amongst many thousands and thousands that we've seen over the years. But fundamentally, our location, where we are, as a nation and as a capital city, that is our strength. And whilst the world is round and we're in the middle of that financial instrument, it's not going to change. In terms of jobs, industry, and whether it be, we used to be a manufacturing economy at one point, but now we're a services economy. These things are only going to get stronger. And, the financial side of things, the financial industry is very, very strong. But now we're seeing a huge, amount of activity in the technology sector, and lots of other different sectors that are booming in London as well. So it's just a changing of the guards, really. That's really all we're at the moment.
Yeah, no, I do agree with you. And one thing I don't do is read all these Daily Mail headlines that you alluded to earlier, where, mass exodus from London or whatever it might be. They're just to grab eyeballs. They might be just a mini tiny trend like we talked about. As you also rightly pointed out, London is a series of micro markets. So one area might be affected differently to another area. That's where knowing your niche really, really comes into play. But we also mentioned about if one industry declines, others will come in. And one of the articles that I read this week was that London is becoming a major life sciences hub, and there's lots of technology related companies coming into the capital. Part of that is looking for the vaccine for COVID-19, for instance. So we will see the changing of the guard, like you said, I think, but we've got to keep the faith with London. I think it's just such a strong and powerful city.
Absolutely, fully agree with you. And yeah, the life sciences industry is thriving, as is the technology industry, amongst many, many others. I mean, in Shoreditch, you've had Amazon move in there recently, not so long ago. Facebook has just taken extra office space now at King's Cross, and I believe also, in other parts of London as well. And we've obviously got the Chinese investment village down in E16, which has been ongoing for a while now. So, there are lots and lots of strong, sectors emerging in London, and all in different areas, in different pockets. The great thing about that is there's no concentration of one particular area. The Silicon Valley of London is in Shoreditch, and that's our little hub for that. The financial services sector is in Canary Wharf. You know, that's our hub for that. So, you know, there are lots and lots of, you know, micro economies, but you know, the truth is everyone wants to be in London, you know, and whether it's for business or wanting to live here, you know, all of those things are satisfied because, you know, you've got great places to live, you've got great places to eat, you've got great places to go out, shop, you know, you name it. London offers everything. And, you know, I don't think that's about to change. It's just going to get stronger and stronger. And as these industries emerge, I think more and more industries are going to come into the UK now. And I think we're going to have some, you know, some really, really great things to look forward to in the next 2 decades.
No, I do agree with you. And I think if there is any short-term decline in any aspect of London rentals, that's exactly what it's going to be. It is going to be short-term. Being a landlord is having long-term vision. So landlords making knee-jerk reactions to headlines like rents falling in London by 20%. No, don't bother to read them. And I'd be interested what your experience is, Imran. But for me, all of our properties, which are in mainly North London and East London, we have not had any rental arrears, touch wood. We've had one tenant that was on furlough but's told me he's going back into full employment in November. And we've had no tenants getting in touch asking for their rent to be decreased, again, touch wood. So again, you know, you've got to know your property, you've got to know the area, and not read these headlines, because if you do buy into them, I think you can make some very poor short-term decisions in what is a very long-term business.
Absolutely. You know, if you're looking at short-term, then, you know, being a landlord is not the business you should be getting into. It's a long-term. Have you
noticed any kind of rent decreases at all? What have you experienced in your business?
Well, again, it depends what areas you're in, and you know, it very much depends on what the tenant profile in that market is. So to just give you a couple of examples. So we spoke about Canary Wharf as an example where we've got lots of, you know, properties there. You know, the market's still very strong there. There are lots of tenants who are still working in the financial, you know, services industry, you know, for all the big blue chip companies. So, you know, the jobs have been pretty safe. Not, you know, there hasn't been an exodus of people, you know, losing their jobs and so on and so forth. So, you know, whilst, you know, the market has been quite strong, you know, the rents haven't dropped, you know, from that side of things. Where there has been a little bit of a blip is there has been lots of new builds that have come on into the market. And, you know, all of a sudden you see, you know, an excess of 2,000, 3,000, 4,000, you know, extra units of inventory in the market. You know, that, of course, is going to cause a little bit of an impact because, you know, it would have happened anyway, whether it was COVID or not. But because it's happening right now, the two major sectors that are missing in the market right now are the students that come and rent in the UK, whether they be from overseas or anywhere else in the UK. That's one industry that's missing right now, and the other side of things that's missing is, you know, there's a lot of these short-term Airbnb rentals, as you know, and I'm sure as you know, as the rest of the community that you've got there, you know, they will know all too well. But you know, that travel industry is evaporated, you know, overnight. So of course there's some inventory that's come back into the market. It's leveled it out a little bit. I'm sure those things will level out and return because, you know, students are going to need to study. That's going to, you know, fix itself at some point. And we're always going to have a travel industry of some kind or another. So, you know, they will come back. So any blips that, you know, you see in different pockets, they're there for a reason, but they're not permanent. And I guess it's part and parcel of being a landlord, you know, having to navigate the market, you know, the ups and the downs, because of course, look, you know, you know, in different parts of London, again, every, you know, August, September and October, the market goes through the roof, you know, and the rents, you know, are 20, 30% higher than what they should be. So, you know, as a landlord, you ride the highs, but sometimes you're going to have to take those lows as well. So there are some areas and some pockets where rents have, you know, had a little bit of an effect, but that's not because there's been a huge disruption in the market. That's little pockets and little things going on because they're going to happen anyway.
Yeah, well, I won't be putting up rents in any of my London properties in the foreseeable future. I'm very grateful for the tenants that I've had and that they've continued paying on time throughout COVID-19. So I'm happy with the status quo, and I ain't going to rock that boat. So I think, you know, I'm going to call on your 2 decades of experience now as a landlord, Imran, because I'd like to know if somebody who's watching this is interested in starting out in investing in London now, as we speak, in late October 2020, what advice would you give them as to the property type and the area that they should consider?
It's something that, you know, we get asked a lot, you know. So our sister company, you know, we've been, as you know, as you know, we've been in the London market for 16 years in actually the traditional estate agency side of the business, and our sister company Morgan Randall actually takes care of sales in London. So we get asked this question all the time by people, and you know, the first thing we say before anyone wants to come in and buy is, you know, we've got to figure out what type of investor you are. Mm-hmm. You know, so are you passive? You know, are you active? You know, that's the first thing we've got to figure out. Do you want, do you want high yields, or do you want, capital growth value? You know, which one are you after there? Mm-hmm. So it's about going through, you know, the steps as an investor and figuring out what do you want, because look, if you're coming into the market and you want to buy something you think is going to double in value in the next 2-3 years, it ain't going to happen. And, you know, unfortunately, you know, you don't, you know, we'll turn that discussion away very quickly, because it's just not possible, you know, to see those kind of returns. But, you know, what you've got to figure out is which type of investor are you? Are you in it for the long run, or are you in it for the short run? If you're in it for the short run, then understand that you could lose money as well as, you know, gain. You know, that is a possibility, because not that the capital growth value is about to go down anytime soon, because I'm very confident on the values of properties in London. But, you know, if you're renting stuff out, you know, and you haven't been a landlord before and you're not sure what type of tenancy you're going to get, you could potentially lose money if you don't go about it in the right way. So I think the first thing is very important. Figure out what type of investor you are. And there is an area and there is an investment type for every type of investor. And just to go back on my personal portfolio, I guess, you know, I can talk a bit about that and give an example on that side of things. So, you know, I don't like to get involved, you know, going round to properties and going around and collecting rents and whatever else. You know, there's a lot of people do with the HMO setups and so on and so forth. I'm very passive. I like to get really good tenants who've got really good jobs. You know, they pass credit check. I'm able to get rent guarantee, legal expenses, insurance on all my properties. So that's why I like Canary Wharf, because, you know, the tenant profile there, for example, is somebody working in a bank, you know, who's on a very, very good salary. They have a very good credit profile. They tend to look after the property a lot more. And, you know, we don't get any issues. You know, the repairs are not really a huge concern as well. If and when something needs to be done, our properties are managed, you know, we take care of them in that respect. We have somebody managing those, and we get things done. But, you know, it's very different from, for example, the HMO setup, where there's a lot more traffic, a lot more activity. You're going to have to be involved a lot more. You've got, you know, 3, 4, 5 different sets of people you've got to collect rents from. What happens if somebody doesn't pay? You know, so you just got to figure out what type of person you are and what type of investor you are. I don't like to get involved in the nitty-gritty. I just like to grow the portfolio and sleep at night comfortably. And that's just my preferred way of doing things.
Well, that's actually very descriptive of my view as well, actually, Imran, because I am a very risk-averse investor. And, you know, we were just framing that question about somebody starting out, and I think they should start out low risk. When you're a learner driver, you learn to drive in a Ford Fiesta. You don't get into a Ferrari, because if you do, you're probably going to crash it. So if we use the Ferrari as the analogy of an HMO, it does take somebody with, you know, considerable experience and hands-on, you know, tenant management knowledge as well. So, you know, it's well known at Property Tribes that I am not a fan of flats or apartments, but only outside of London. I think in London they do work very, very well. And my kind of view is to look for pre-owned apartments, maybe, you know, 2 or 3 years old. You're not going to pay the new build premium. You need to consider things like transport links, security, does it feel safe to live there? Parking, I think it's good to have a parking space with an apartment in London. If it's over 2 floors, it should have a lift. These are the kind of things that I used to think about when I was investing. But I think post COVID-19, tenant priorities have changed. And again, we don't know if this is a mini trend that's going to, die away, or whether it's going to be something that becomes really embedded. But, some of the things that we're hearing are tenants are looking for more outdoor space. So, balcony, nice view, proximity to green spaces. Those are kind of things that could come into play now, couldn't they?
Absolutely. And, the working from home culture has accelerated massively in the past year, as we've all seen. So, naturally, we don't want to be stuck indoors all day, our desks, wherever we're working. I know everyone's got a makeshift, office of some type. But, you want some outside space. You want to be able to walk around and see people and be amongst life. So, absolutely, priorities have changed. And yeah, that could be a trend, because I think the working from home trend is certainly going to be one that sticks with us for a very long time now. That was something that was probably going to happen anyway to some degree. And again, it's just an acceleration because of COVID. But, again, there's a different type of renter for every property, whereas equally some tenants will want the outside space. Others maybe, they haven't got the budget, and, they're in that starter phase of their journey in renting. So they'll take the stuff that hasn't got the outside space. So, for me, it's really about, look at what the market's after. And the headlines, as you alluded to earlier and pointed out, don't get carried away with the headlines, because the headlines, pick up a story. They're not representative of the entire market. There is a different type of person in every category. So, look at the type of renters in each market and really try and reverse engineer that situation. If you're a renter in that market, what would you be looking for? And I think you pointed some perfect things out there, about, not having a lift, if you're above 2 floors and so on and so forth, having parking space, just try and think of, as a renter, in that market, if you were looking, what would you want? And that's the answer. It's really simple. A lot of people really complicate the process, but I always like to reverse engineer everything. And, if I put myself in the shoes of a renter, what do they want? What are they looking for? Some people will be looking for outside space. Great. So if I want to go down that road, great. I'm going to pay a bit of a premium. Is that going to work out for my investment profile? And if not, if I go for the other type of investment, again, do the figures stack up? But equally, can I find that type of renter? And the answer will more than likely be yes, because I always go back to one thing. When I talk to investors, I always say, look, it doesn't matter what type of property you've got in London. You tell me a property, that has never been lived in, and you just can't point one out to me. It doesn't matter what type of property it is. I've seen some crazy properties in London, which have been like the size of a shoebox, but people rent them, people live in them, because again, that is a starter home. It's a starter renting place for someone. So look, it's just about figuring out what type of investor you are, and then figuring out, look, does that market support that type of renter, and am I okay with that profile, and working backwards from there. So yeah, some of the things may change, but again, how long will it last? It may last for another 5 years, 6 years, maybe 10 years, but doesn't mean to say everything without the outside spaces now all of a sudden, on the sidelines and no one's going to live there.
No, I agree with you. I think you're very similar in your investment style to me, Imran, because it's, from what I've always done, is try to just niche into postcodes that I know really, really well. And in my case, where I've got good letting agent contacts because I have a fully managed service. And you're the same. It's kind of really going down to a granular level in that postcode, going to talk to lettings agents, talking to other landlords, going on to property tribes and saying, does anybody invest in N4 in London? How are you finding it? And really getting that granular knowledge. I think that's a good way to mitigate risk as well. Really kind of know your patch, as they say, and that all boils down to doing your due diligence. And I think proximity to restaurants that deliver food. That's going to be important. I've always subscribed to the pint of milk rule. You should be able to walk out and get a pint of milk within 5 minutes of your front door. And I don't think those things will change. But, you know, it's interesting to say, as you have done, to put yourself into your tenant's shoes and work back from there. And that's actually what I've always done, even to the extent that when we've bought flats in London, I've asked Nick to drop me off at the local tube station at night, and I've walked from the tube station to the property to see if I felt safe. Because if I didn't, then no female tenant's really going to want to live there. So that's half my market gone. So these are all the little things that you can do to find a good investment in London. And I think as we round this off now, Imran, because I could talk all day on this topic, and I think I know the answer to this next question, because you've actually got a new prop tech startup called PropertyLoop, which is a new lettings platform for London for tenants and landlords. We'll put the video in the footer actually of this video as well for people that want to explore that. But my final question is, are you, as a landlord of 20 years, are you going to keep the faith with the London property market?
Oh, without a doubt, there isn't a single other place that I would invest. And I tell you something, over the last 20 years, you know, I've had lots and lots of different people and lots of different things land on my desk, and nothing else interests me. You know, I've seen people out of London, up north, and so on and so forth, telling me that that's a next boom, and you know, catch the wave, and you know, go to Dubai or wherever. It's not for me. London for me is the most solid investment you can get. You know, our property laws are fantastic here. You know what you're going to get. The job situation is still fantastic despite what we go through. I'm so confident in London, you know, that I'm still an active buyer right now. So I don't think I can say any more than that. So if you look,
that's very reassuring to hear that. And obviously you've invested in you've co-founded your prop tech startup PropertyLoop as well to service the London property market. So I think that underlines your commitment to London as the capital city for you know, good investment for landlords. I'm just going to finish by saying, Imran, we've not experienced anything like this COVID-19 you know, economic fallout that we're going through now, and which I think is only just starting. I think we've got a very challenging time ahead. But if we reach back into the past, when we had the 2008 financial crash, one thing that I noticed whenever there's been any blip in the property market is that London, whilst it might decline quickly first, it always recovers more quickly. So I think, again, the future is bright for London. I am not selling any properties in London. I'm very happy with what we've got, and I'm going to stick with it like yourself.
Absolutely. I couldn't agree more. And you're absolutely right. I think we've got a way to go with this, you know, whole COVID thing. We're not out of the woods. I know everyone's pinning their hopes on a vaccine, but I think it's here to stay. And I think, you know, we're just going to have to get used to, you know, living with it. And that's really what we're all going to discover over the next couple of years. But, you know, we'll move forward, we'll move on. And, you know, without a doubt, as he said, you know, London, if it experiences a blip, you know, on the way out, you know, the acceleration is a hell of a lot faster, you know, than the dip on the way in. So we saw that in 2008, you know, on the way out, you know, things just accelerated so fast. And I remember, you know, one of the things that I remember, you know, vividly every time I think about this is whenever investors are on the sidelines and they always say, you know, I'm going to hold on, I'm going to wait for the next crash. And the thing is, look, you can't time the market. You know, it's not about timing the market. Timing the market is better than trying to time the market. So, you know, if you get in and you have a solid, stable investment, you'll see over a period of time, you know, the marker is always that way. It will do this along the way, but it's always that way. And that's the great thing about London. What you don't see is you don't see it go like this and then that. It just doesn't happen. So the longer you're sitting on the sidelines, the longer you're thinking about it, you know, the more expensive it's going to get. So if you want to do it, you've got to take the plunge, and you know, now's a great time to do it than any other. So yeah, that's my take.
I totally agree. I'll just cite our very first investment in London in 2004, 1-bed flat in located between Highbury and Islington and Holloway Tube Station. it's 300 square feet. That is very, very small. It has got one bedroom, but it's interesting, Imran, because you said there's a tenant for every flat, and you're right. Every single tenant that walks in that flat, I can absolutely guarantee you 100%, they'll say, oh, isn't it small? But that flat has never been void as long as I can remember, in over nearly 18 years, because it is entry level. It is the least expensive flat in the area. It's in a gated development with a parking space, and it has good security. And there's two ladies living there at the moment, and they've been there, I think, two years now. And no issues at all. So totally agree with everything that you've said in this. And it's been a very interesting and wide-ranging discussion, and I've really enjoyed it. And I could go on, but I think we need to do a part 2 in a few months' time, when we see where if these trends have actually materialized into anything that's going to be more long-term. But for now, Imran, thank you ever so much for joining me here at Property Tribes. And for everybody that's watching, I do hope you've enjoyed this deep dive into the London investment buy-to-let market. We'd love to hear your thoughts. Are you investing in London? Have you had to lower your rents? What trends are you seeing? What are your thoughts? Are you going to keep the faith, like myself and Imran are intending to do? It'd be a very interesting discussion all round. So thank you, Imran, and maybe we can catch up with you again in the future and chew the cud again on London, because it's always an interesting topic and so many different things to talk about.
Thank you for having me, and it's an absolute pleasure, and I look forward to coming back again.
Awesome. Okay, so thank you very much to Imran, and please do, if you've got any comments on this interview, whether you disagree with us, please say. We love teasing out the issues, and we'd love to hear your views on whether you think the future is bright for the London property market. But for now, it's goodbye from Imran and goodbye from me, and thank you very much for joining us here on Property Tribes TV.